Good morning. Clearly, markets are confused, and today was somewhat anticipated because that's what's been going on. But many green bars followed by red ones, GBIs as we call them, bear market confirmation. Uh, Certainly looked like it could get a little bit higher. Anyway, was it Snapchat news, earnings, dragging down Facebook and Amazon and so on. Yeah, that's exactly the number I got written down, McGraw. And it seems things have shifted. One of the things I wrote in the weekend letter was that institutions seem to be kind of, I forget what words I use, jumping over themselves, chomping at the bit to get long this market on this decline in anticipation. And, they have to begin to average in whatever potentially what they decide to buy stock wise could be producing a lot of pain. Why they'd want to buy things like, Snapchat, Amazon, Facebook. I mean, things that have been relatively weak, who knows, whatever their reasoning is versus other things. But in any event, we've got this gap down today. And so continues to be the NASDAQ, whether it's tech related, we see semiconductors weak, we're stronger, showing some relative strength, now a little weaker again. And so now different parts of the NASDAQ, those internet type stocks, and FDN has been going down forever. But financials perked up yesterday and held up the market. So that's what I think we need to look at today to see if what was showing the strength yesterday that was stronger before financials, whether they start to give it up. And, one of the things that we see is that strength, that happens on any given day doesn't really take out significance and resistance in any significant way. So while this moved up and had a good day yesterday, sellers, held it right there, and buyers, didn't back off, didn't take out the resistance either after consolidating for a few hours. And now we see it's not that active pre-market, but you can see where it is with the crosshairs, gapping down about halfway into that bar, and it's in a downtrend. And it could be all part of a bottoming process. Not that this looks good at all. It looks terrible with this big rounding top and breakdown. So any advance, should it happen in the next week or so, unless it rips all the way up here, we just anticipate it being a lower high and then down again. So keeping an eye on these today to see if they give it up and go back down into the void. Power move up, nothing to stop it from going down, unfilled gap, and so on. So again, the strength concept, the way it goes up, and you can see it even here on the 15-minute chart, doesn't leave any support. Now, where is this here? I'm looking at that pre-market data. It's above this high here, but you've got this topping pattern, and now it's broken down. And of course, that's bearish, and it's got room to drop. And so looking at financials, if you put up a thumbnail, let's put up this chart or a 5-minute, whatever you choose, and see if it breaks down below here, because if it does, it goes down into that gap. And if it does, then, odds are SPX is going down. Yeah. So I'm pointing this out because looking at SPX, as we do now every day, that they're available 0 DTE to create some intermarket strategies or views. And so premiums popping to the upside now. Before it was like no brainers to the downside. You could get so far away. When I say no brainer, that means, like, in my mind, 99.9% chance you're going to get to keep that money by the end of the day. And I wouldn't call it 99.9% chance on the call side right now, but it's pretty damn high. But this is something you want to keep an eye on since the call side is where the juice is, or premium. And if this gaps down here and rips back up, well, that's a piece of information that says, maybe that, 40.25, could be in danger. So I don't think so. Yesterday was like anything above 4,000 or so, anything below here should be fine. It was far enough away. There was premium on either end. Now the downside is a bit more chancy, let's so speak. So premium to the downside is 38 and a quarter, 38.20. So that's still pretty far away, but this is gapping down here. So if things get out of hand, you see the cursor on the 5-minute chart, that's still pretty far away. But if financials begin to fall apart, that could be in danger. Whereas if we go 4,025, financials are already in somewhat trouble. And I think that's safe up above this whole number. And while there's nothing above 4,000, if SPX clears this, unless it's a breakout failure, right? We got something to think about. So 38.10 on Friday. That low there. Yeah. So I'm thinking, depending on what I'm thinking already, but we'll see where today ends. I'm thinking and hopeful that this low breaks. Assuming a weak close today, I think this will go down below 3,800 into this area down here. And I think this is where we really, want to see like tick extreme minus 1,500, put call ratios 1.3 or higher, just nastiness. And I think that's where we're going to get a low point, but only because this is the area, not an exact point, but this is the area. So we'll see. I mean, if that plays out, we've got a bottoming tail bar. We see, what happened last Friday. It happened at the end of the day. We had that follow through yesterday, and now it's opening up down here. So buyers are now caught, and that is supply. And if things don't rip right back up again in the first 5 to 15 minutes, longs have to think about, cutting and running, which could drive things down into the void. Right? This is the void. There's nothing below here to stop it from going down. Right? So that's what we need to look at. I'm just flipping here to Bitcoin because one of my comments yesterday was Friday's rally was suspicious because Bitcoin did nothing, and it's still doing nothing. But one of the things that happened yesterday that I mentioned in the room was, hey, Bitcoin's falling and the market's still holding up. That's pretty good. And so, buyers weren't running for the exits, but they're at the end of the day where they had the opportunity to take it above resistance and move it, there was that backing away and selling. So more apprehension. And, when the bulls are really in control, it's like, it breaks and goes, and that ain't happening yet. All right. Qs, obviously weak. And I was thinking, so whatever's holding up here, pretty darn good, because with Amazon going down and Facebook going down, I mean, Apple isn't cracking like them, but it's a negative start. But I thought it might be a bit lower, but we'll see where this goes. Clearly, bar by bar, it's bearish. But again, if it doesn't, turn around here and get back up, begin forming a range, I think it opens up the door to going down there. Dow had a decent day. It didn't get more than halfway into the red bar, just kind of our arbitrary kind of subjective reference point, just 50% to measure how far does it close into a red bar to say, hey, that's pretty darn good, to get that far into it. But, it didn't. And even though it cleared this, it was the best performer intraday, was the best looking chart, it performed the best, yet it just hit, the area that I considered a line in the sand. And now it's back to the pivot here inside day. So we'll see. Walmart did better after getting creamed. Of course, that's been pounded down, and other things that were pounded that were up a little bit. And we'll see what they do today. The Russell didn't do much of anything. So markets are confused. Institutions want to get long. They know we're close. Let's see if we get that next shoe to drop. The weeklies, still bearish. This isn't near support. Just going back here to the Qs. This is, down here below 300, a little poke down into this area, give or take. So, we've come down a whole bunch. From my point of view, just, here was the anticipation, buyers stepping up for the turn. Let them get shellacked one more time and some nastiness go on. And I think we're going to, begin a pattern like this, even if it's a lower low. I mean, one of the things that we reviewed in the letter, let me see if I can, was it here? One of the things, just reviewing our arbitrary way, our unsubjective way of looking at slowing momentum without indicators, was to look at the percentage move. Right? And we look at the distance between the lows. And so I just showed this, hey, this was a power move. And then this was another kind of a power move, but, it lost some momentum. And then this next one lost even more momentum. So the indicator aficionados that would point to bullish divergences, well, is it in an area of support? Oh, well, I don't know if they look at that, but this is, but it's still in a downtrend. So a break below here, the lows will be closer together. And I think that becomes a very high probability scenario. And maybe it gets down near 30,000, big whole number. So that's kind of the game plan. Not so much for today necessarily, but, going into the end of the week or maybe into next week, just giving those points of view as to why it should be different this time with making a turn. We looked at Bitcoin, crude oil, pretty sloppy like everything else, easy to get chopped up right now. Silver, finding a little bit of buying after breaking the low. We talked about the euro, being down here at this support and moving up. So dollar coming down, that is helpful to a dollar coming down. You see it broke this pivot low. It was extended. So that's supportive to silver and gold. They still have to go through a bottoming process. Well, cracking to some degree thing. Yeah. It violated, this prior swing low and it broke out. So that's a bearish pattern. You can see the way this trades because, it's an ETF and you got other currencies trading overnight. So this is supportive to metals. And, we talked to XME yesterday, this bottoming process, and someone in the room brought up NUE, this pattern here. And that's why I mentioned XME. And so we look at these intermarket relationships as to, well, here's a bottoming pattern at the 200. Well, sometimes they do fail, even though this is extended, but it is at a pivot low. And now the dollar beginning to pull back is supportive to, other metals. So this should be able to, it's wherever it is here right now, not really moving very much. But Yeah, McGraw. I mean, you're doing your thing in the afternoon, but I don't know if Dan mentioned this as a put spread or an actual long yesterday after it was brought up. But sure, a put spread that's a put spread pattern. And then Dan saying long posted over the high, so it had to take out the high. Now this one we looked at as well, but it was below the 200, and so this is at support. And so moving averages, look, they're subjective. We like them, but they're subjective. This is below the 200. So however the price data was that put the prices in relation to the 200 here, is it really all that relevant? Well, from a point of view of a self-fulfilling prophecy who's looking at it, yes, but this is at support, and NUE, that's at support. So there's similar patterns. This one's on the 200 and it's a little further away from the 20. So, say this one got a little more extended to the downside. You see the way this went down. So, the moving averages have to follow price. Either they should both go up if they're going to go up because it's the same sector. All right. And we always look at the transports, which, nasty drop, kind of bouncing up here. And, they didn't get too far. Same story, well below the 50% mark of the wide range bar. So a lot of bearish stuff. This broke down, right? That broke down under this support. So you've got breakdowns here. You've got, the breakdown that happened a while ago in the industrials. They're down here on support. And, there's biases, arguments, debates. Is it a bear market? It's bearish. Who cares? It down 20%. Maybe this is down 20% by now. I don't know. From the high. Maybe it is. No, it's not. It's down 15%. But who cares? That's all.
Greg, just to add to that comment, I totally agree with you. It's bearish price action, which we've identified way back on that bearish engulfing bar a month ago, et cetera. But every morning, the news is parading people all over the news are we in a bear market yet? What's your prediction if we're going to have one or not? And that is my exact answer every time of who the hell cares? I mean, who cares?
Bearish.
Right.
Yeah. So, yeah, I mean, look, the media's got to do their job. I don't blame them for doing that. I mean, they're there to entertain, not get your financial advice from. And, one of the things that I have taken away from why watch it at all? Well, one of the reasons I watch it, because you say they parade people, and they do. But when I see, these mutual fund managers, hedge fund managers, anybody controlling large amounts of money, when I hear them saying the same thing, I take note of it. Now you could think, contrarian point of view. Well, if the chart matches it, I mean, they're controlling a lot of money. And so makes sense that from my point of view to listen to that. VIX not moving around. And so we don't have that big fear thing. So that's another thing to look at, see if the VIX spikes up here. And we'll see what today brings. To you, Dan.
All right. Good morning. Yeah, so it's like it's a fancy definition, like it's going to flick a switch and things are going to change drastically worse. It's like, no, haven't we felt inflation for a year? Haven't, all the problems have been here. So let's see, we're not that heavy. A lot of our shorts didn't trigger yesterday. They might today. We had TTD in the weekend letter under the lows. Look, so now we got to cancel it. Too bad we didn't get filled yesterday. We would have a beautiful open gain right now. So I'm gonna obviously have to go through here. TTD cancel. I mean, Roku was a short we got into yesterday. If I can type. So we did short this right at a bounce, 91 to 92, had a beautiful entry. I had posted here to cover a third pre-market and then move stop 30-minute high. So that's for you all. We also have a call spread. And it looks like Snap is really wigging that sector today. So where are those stocks? Snap saying they got a gloomy profit outlook. That is one big ugly gap. Let me put this in a window. So that's dragging down Facebook, getting whacked here down 15. You know, let's see what it does. 180. It has a void up or below. So this is actually a pattern day trade, 30-minute high or low. I don't know. Pins 1870. Wow, that's a big gap. Look at that, gapping under all of this big fluid move up. That's pain. A couple more retailers out. A and F had earnings. That's getting whacked. Hey, this looks like a gap in Snap. Wow, look at this gap. Look right to this little pivot here. Not to say that that's magical, gonna do anything. Even if it wasn't there, I'm just looking more of the amount that it would be down on the weekly. So that is gonna be a beautiful watch to short out of the money put spread. It's on earnings, so volatility is high already. The gap down, it's going to be even, you know, it's not going to, I can't say it's going to be more volatility because the news is already out, but it's going to be higher post earnings than it is without the big gap down. So 10, 15, 30-minute high, I don't know. This looks fantastic for a put spread if it's stable, when it stabilizes. Ralph Lauren. Downtrend stabilizing. Earnings will come back to you. SWTX, I think this is a bio. Wow, look at that. It had a big gap up to 46. Now it's back down to being flat to negative. Wow. Airbnb said they're exiting China. Exiting China because of the lockdowns. Starbucks, I read, they're exiting Russia. DXCM, actually, we actually put on a way out of the money 250 put spread on this yesterday as a potential double bottom. And it's getting a bearish gap down here. Nothing to do with it being it's not a bio, but we did talk in the green room. It was in the healthcare diagnostic sector of what the gap risk would be. And it's talking about buying a company, which the shareholders don't like, but you know, we still have $43 of cushion. 30-minute high. I'm in the trade too. I might even look to add to it. NVGS, you know, it isn't an uptrend daily, weekly, monthly, but light volume, gapping down a little, no interest. NDSN, I can't tell where you're gapping, but downtrend, HEI. It's just no interest. Honeywell, I think reaffirmed numbers or whatever, no pattern. CSIQ had earnings. Had a deep move into earnings. Look at this is the sector TAN. So TAN, look at we got our ETF trader into this. Big, look at that. That's a W bottom. It is, it's textbook. It's just the exact picture is always a little different. But this is a nice little W bottom in and of itself. And then it just turned out to be a big old monster, big one retest. So that tan is holding very well. Zoom bottom right, you see here, earnings. It was up at like 105, I think, last night. A big old gap. So this 30-minute high is a put spread. That looks fantastic. So I like ANF put spread 30-minute high. And I don't know on this one, 10, 15, I don't know. I'll watch it and tell you when I see it. ALB, this looks fantastic. I like Friday's big old bottoming tail. And then it is a closing breakout, bullish weekly. That looks fantastic. That's going in a window. And I think that was earnings too. So McGraw, let's keep an eye on put spread on that. Sky bottoming pattern. We'll come back to you. CRMT, light volume and downtrends. Hey, Jim. This NLS, this poor thing looks like it's going to zero. Wow. Wow, look at this thing. Wow. We're next week MT Live. We're going to talk about trading bear market bounces. The week after that, short selling, and you know this is what this is like normal price action on in a bear market. AutoZone at earnings, I don't see a gap. Now I see a gap, a little one. We'll come back to you. CDL X alarm I had posted yesterday. Hey, that looks great. CDLX 5-minute low is a go. 5-minute low. Let's see what else. I had another alarm go off. LPSN. Same LPSN, 5-minute low ago. Wolf had earnings.